Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Kirsten, Wegner. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. And if you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, FTSE Russell, and RJO Futures. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. Visit rjofutures.com to learn more. Today I spoke with the CEO of Modern Markets Initiative, Kirsten Wegner. Kirsten is a great resource for traders and investors to learn more about the technological innovation in modern markets. Today we talked about the growth of automated trading and artificial intelligence, how there has been a lot of consolidation in the high-frequency trading space, and what many of the new generation of high-frequency traders are now doing. Last but not least, we talked about the implications that a financial transaction tax could have on traders and investors. So without further ado, let me take you right to the interview with Kirsten.
So I am based in Washington, D.C., and within MMI, I'm really serving as an educator in Washington to different congressional staff, to different other industry stakeholders, and really to the general public on kind of technological evolution of the markets towards automated trading and the net benefit to investors.
Well, let's talk a little bit about HFTs, high-frequency trading, and what's really interesting to me about HFTs is I think that each year, I don't want to say it's become less of a topic of conversation among traders. I think that it's really just become almost more mainstream, and it's really more about automated trading now than it is just about HFTs.
I agree with you that HFT has become more in the mainstream. I think it's definitely become less controversial. And I like to refer to ourselves now as automated traders because really, I think we've reached a point where a lot of the technology has been kind of accepted and embraced by multiple platforms. It's never been really a better time to be an investor than now, where there's, cost-free trading, zero commission trading. You can trade from your iPad. We've really seen technology drive down the cost of trading for retail investors, and automated trading and high-frequency trading has been kind of an important part of that cost savings to investors.
Yeah, I absolutely agree that it has become much more focused on the automated trader, automated trading, than it has been in the past, pretty much solely focused on really HFTs. And one thing I just want to point out is that, with the HFTs, yeah, they have helped decrease the cost to no commissions for stock traders. And I think even ETFs as well. I'm not really sure about that. I don't trade those products. I trade futures, and that hasn't happened on our side. We still pay commissions and fees for our trading. But just getting back to what you said at the beginning on how this has become more mainstream and that one of your major roles is education. And I think that really is the reason why HFTs have become more mainstream.
Yeah, thank you. And I would say, I think that the technology evolved very quickly before all the technologists had an opportunity really to explain it to the public. And I think, you see 15 years ago, this technology was perhaps misunderstood. And so, there were conspiracy theories about it, books written about it. And it's really been, a positive experience to see, going to different conferences, trade shows, universities, speaking before Congress, that people are now getting to know the technology and to understand, the benefits. Any new technology you introduce, there's a possibility for it to be either feared or misunderstood. And it's really important for those individuals who create the technology to communicate to the public how it benefits the public, because just innovating for the sake of innovating doesn't always move the needle with public perception if you don't take the time to explain how you got there.
I'm someone who's always really embraced technology, even from an early age. I remember being on the floor in the pit, and when the E-Minis were launched, there was a time where electronic trading in general was controversial.
Yeah.
And I moved over to that right away, right at its really on the onset. And then even look at Bitcoin and crypto. I really, people that I had never thought in a million years, friends of mine, golf friends, we now talk about crypto sometimes. So it's just a matter of really getting educated on these products, and they take time. And I know we're not talking about products here. We're talking about automated trading, but I think that it still really comes down to just learning more about it, learning the ins and outs. And actually, I want to talk about something that you recently did when you testified in front of Congress in December about, I think you were on an AI hearing task force, and you guys were testifying in front of Congress about robots on Wall Street.
Yes. I think it was one of the best titles ever for a congressional hearing, Robots on Wall Street. I felt like I was part of the Matrix or something. But I was really thrilled to be invited. It was an artificial intelligence task force hearing before the Financial Services Committee. And I was invited to testify to talk about kind of the rapid computerization we've seen of the capital markets over the past several decades, the rise of automated trading, really how we've seen those 1980s movies of Wall Street traders, replaced by, if you walk into any high frequency trading shop now, you're going to see rows of humans by their computers. So the face of the trading floor has kind of changed. And just to look ahead, to be put on my futurist hat a bit and talk about, how artificial intelligence can, continue to shape the markets in a direction as a tool for investors.
What were some of the questions that Congress asked you, and what was the goal of Congress having you guys in to talk about robots on Wall Street?
Well, I think they really wanted to learn about the technology and get a sense of how this could impact, future landscape of the workforce. Some of their questions were, and this is a time-old question. If you look at the history of automation of Wall Street, these same questions were asked in the 1940s and 50s and 60s, as robots were invented. There's always been a fear that these new technologies will replace humans. And I think the core message I had for Congress is really that AI technology is a tool for humans rather than a replacement, right? And so they wanted to get a sense of what might the future of workforce look like. And I think as we look at the vast amount of data that has to go into a functioning, AI system, one of their questions also was, how do you make sure that that data doesn't discriminate against specific consumers? And truly, this is less relevant in the kind of trading space that you and I occupy, but more in like a consumer lending standpoint. Like if you're getting in data sets about people's zip codes, is there a possible for like a disparate impact that certain demographics of society might get different, interest rates on their mortgages than others just because of their zip code alone? So those really, there's some social questions there, right? Social policy questions. How does the data input, impact, the financial outcomes for different groups of people? So I think they raised some really good policy questions at that hearing, and there was a lot to chew on.
So walking away from that, how did you feel that Congress felt about your answers and everybody else's answers that testified? Because I see a lot of hearings on Congress, and a lot of times you see these hearings and really it doesn't seem like much gets done afterwards. Doesn't seem like much changes. I'm just curious how you felt when you left, and if anything has changed since you testified in front of Congress.
I think that there's continued curiosity. Look, this is like I think this was the second or third in a series of ongoing hearings that were to have been held in capital markets. I think the coronavirus delayed the timing of some of those hearings now. But I think above all, the lawmakers, both Democrat and Republican, want to be able to make informed questions of industry stakeholders. So if you're coming in, they know the right questions to ask. Artificial intelligence is such a kind of a new issue for them. They just want to get all the information possible in order to ask the right questions. They're kind of at the issue spotting stage, I'd say. This isn't something they can really legislate around, but they want to make sure that all the companies are acting, in good faith, that they're really taking into account, questions of non-discrimination with Maxine Waters as the chair of the Financial Services Committee. And I think what I'm expecting to see in the coming year will be continued hearings before Congress. I think there is really a sense of kind of an open door for industry stakeholders to come in and talk to them about these issues. And I know that if you look at the SEC and the CFTC and other regulators, they're all trying to welcome industry stakeholders to talk about artificial intelligence so they can better understand it, so they can come up with the right policies. Because at the end of the day, I think they realize we need to promote technological innovation in the US. We're in a very globally competitive, economic landscape where we do want to strike that right balance between promoting, those stated social policy objectives of promoting non-discrimination, but also making sure we have fierce competition in the markets to make sure, we're competing against people in other to compete against, I'd say, companies in other countries as well. So it's striking that balance between some regulation and not too much.
As you were talking, I was sitting here thinking, how do you regulate artificial intelligence? I mean, I don't know. I really can't really come up with much as to how they would even be able to regulate it.
Yeah, I mean, I think you raise the right question. How do you regulate artificial intelligence? I think as you look ahead, the real kind of masters of the universe will be maybe not the controllers of the AI systems, but the people who control the vast data that gets inputted into those systems. So the questions I'd see arising might be, how do you establish a reasonable cost of that data for investors to have access as the input for their AI system? Or, what are the intellectual property rights of that data that are the inputs to your AI system? What about the privacy rights of that data that are the inputs into the system? Because it's the whole, you're developing this system that can chew up huge amounts of data, but without that data, you can't really compete, right? So I think it's about data becoming the next kind of natural resource for this industry. And how do you have the right policy incentives to make sure there's competition, that there's no kind of monopoly practices in that everyone has access to the data, but that it's also something that preserves IP rights. And these are all, they seem like such abstract questions, but technology is innovating so fast that I think we're going to get to these questions sooner than we might expect as technology, rapidly is deployed in the coming years.
Yeah, those are great points. And I want to move on and talk about HFTs a little bit more again and some of the trends that you're seeing. One trend that I am definitely seeing, talking to a lot of HFT traders, is consolidation. I hear a lot about that. What trends are you seeing in HFT?
Yeah, I mean, I think that's right. I think we've seen a lot of consolidation. I think, it is expensive to operate as an automated trader, as a big, liquidity provider. So I think there is consolidation. I think, some of the exchange data fees that are getting more expensive have also maybe contributed to some of the consolidation that you have, multiple companies pooling their resources together to buy those data fees now. And I expect we'll continue to see consolidation in the industry in the coming years. I wouldn't be surprised if there's more.
Yeah, I wouldn't be surprised to see more consolidation either. And I'm curious, with the consolidation happening in high frequency trading, are a lot of them moving now into AI, or are they moving into lower frequency trading? What are you seeing?
So I think it's a really interesting question on this kind of next generation of high frequency trading, right? I think some firms are using AI right now, less from a trading execution perspective and more from, I'd say, like a reg tech perspective, that they're using types of automation to maybe detect bad actors or people who are trying to manipulate the systems and turn those bad actors into FINRA. So I think it's kind of more policing their systems right now. I expect to see more use of AI, maybe from, generally within the financial services industry, from like a compliance and filing standpoint for, completing forms with regulators. But what I really see also is, I think we're going to see these larger HFT firms diversify to other geographies where they haven't really dominated the markets as much yet, like Asia or other developing countries, deploying those technologies in those other kind of geographic regions, because there still are, bid-ask spreads they can continue to narrow and kind of chip away at those inefficiencies. I also I think we're seeing HFT firms, use some of their high-tech technologies for launching IPOs on exchanges, or, diversifying into other areas like ETFs. So I do see, as the kind of HFT market has gotten saturated and there's more competition, I think they're deploying it, again, more broadly geographically and into other types of financial products. So I think that's going to bring a lot more competition to those other areas and should be a net positive for investors.
Okay, traders, we're going to pause for 30 seconds and we'll be right back. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and the Micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. You could try it today for free at tryttnow.com. I want to move on and talk about the political landscape. I think that a lot of us are maybe forgetting that it's an election year with everything going on. I could see why the election is really kind of put on the back burner on the headlines. And going back to when we were watching the primaries, the Democrat primaries, I heard some talk about the financial transaction tax. And you and I have talked about this in the past. I go to your website to read a lot about what's happening with the political landscape and how it will impact our industry, the financial industry. What are your thoughts on what you're seeing right now with it being an election year? Anything in particular that we should be watching for as traders that could have an impact on us? And if you could also just touch a little bit on the financial transaction tax.
Sure. Well, I think that's a really relevant question you're raising right now. Look, we're less than 6 months away from the November elections. We're at a point where, the coronavirus has just kind of battered the markets in some level, created so much volatility. The markets have gone down, then up, and down, and then up. The federal government has spent a ton of resources on stimulus to try to stabilize the markets. And so the government has been on this big spending spree. And at the end of the day, they're going to have to figure out a way to pay for all that. And so I do see, as the elections approach, that the financial transaction tax proposal is something, I expect to continue to be seeing discussed, especially in light of the need for revenue. I think what I'm really flagging to investors, if you're trading, futures or derivatives or, other types of asset classes, that most of these proposals do touch on, those types of financial products. And so it really does impact all traders. And I think, there's been this misperception promoted by some, I'd say, more populist Democrats, that the financial transaction tax would, quote unquote, punish Wall Street. But, at the end of the day, and you can look at our website at modernmarkets.org, we have the studies available. At the end of the day, this has a devastating impact on savers in 401k plans, IRAs, 529 plans, pension fund plan recipients. Vanguard did a really interesting study that even a 10 basis point tax across all asset classes, that's derivatives, bonds, equities, that 10 basis point tax would likely delay retirement by 2 years for just an ordinary investor. So that's a lot of extra time to have to work to pay for this tax, right? So, and we have had studies also conducted that show if you have like $100,000 in a regular investment account where you're expecting, I think our assumption was like 6% a year return, that over 40 years, even this tiny 50 basis point tax would add up anywhere from $40,000 to $60,000 over a lifetime of savings. So it's real money. And if you're an investor, I think it's worth, educating yourself on the issue because, despite this tax having been abolished by a Democrat president and a Democrat Congress, I think it's been over 50 years ago that it was abolished. It's something that's coming into renewed focus because it's just a fact that people are looking for revenue.
I was going to say they're looking for money. That's the bottom line. And you have to really be aware of these things because they could have major impacts on us as traders and as investors. So I guess going into the end, I can't even believe we're halfway through 2020, right, Kirsten? I mean, this is unbelievable.
It's amazing. It's just sped by. It's sped by.
Yeah, I mean, it really has. And during the lockdown, I was thinking about a couple of things. And, we're not going to these FIA events. We're not going to any conferences this year. And at every conference, it's always, what is the major topic impacting our industry this year? And I was thinking that obviously it would be coronavirus would be the number one topic being discussed. But something that I think that was very important during the lockdown was how the futures markets really performed very well under extreme volatile conditions. And markets were there to do what they were supposed to do. And I think one of the key things that happened during this crisis, which didn't happen under 9/11, obviously two very different events, but the markets were closed during 9/11, and this time the markets stayed open. And I don't know, I thought that was something that would be a big topic. I'm just curious what you think about that.
I mean, I agree. I think this was like a huge test of kind of the resiliency of the technology. And, I think over the past couple decades, I've heard, we talked about some of the conspiracy theories about high frequency traders. One of the stated theories had always been, in a time of great market volatility, the high frequency traders are going to pull out of the market. Well, I was really motivated, given that there had been this kind of conspiracy theory, to collect the actual hard data from my members and from the industry at large. And the data just clearly shows that the automated traders stayed in the market. They continue to provide liquidity. The designated market makers, who are usually functioning on the trading floor, continue to operate remotely. And what this meant was, in the past, either a trading floor might completely shut down for days or a week or longer if there was a huge market incident. But we were able to, see that the markets remained open. And not only did they remain open, but the bid-ask spread that normally would have widened stayed really tight. It stayed really narrow, which was great for investors because if there had obviously been a wider bid-ask spread, investors would have gotten worse prices and it would have been more expensive to trade and, rebalance and conduct all the really important risk management that people were, doing in the months since March. So I was, delighted to see that the markets continued to function, that the technology worked. I'm always going to say knock on wood when we're talking about technology working because there's always some, risk of a glitch. But for the most part, I think the markets from a technology standpoint were very resilient.
I mean, no question. Someone like myself who traded them actively throughout was the busiest I've ever seen the markets. There was times where I was looking at it going and kind of just saying, wow, on how fast some Sunday nights we went limit down on the futures. But I think that, when it comes to traders, whether you're point and clicking or you're automated, when markets start to move quick, I don't care who you are. When we start going up or down 5% in a matter of minutes, and that happened during this time, you're going to be a little bit worried about working a bid or offer. And a lot of the stuff is happening at the market. So it may not look like a lot of us are there. For myself, I wasn't working any orders except to get out. And even those, a lot of times I was just going to the market, and, you're getting hit immediately. So it's to say that whether it's automated traders pulling their bids or offers when things really get busy. Well, I mean, I think that's most traders. I mean, as traders out there listening to this, I think you have to expect it when there's uncertainty. I don't care who you are. that means that you're not certain of where you want to work a price. That's going to happen. These are markets.
Yeah. And I think it highlights the really important role of the designated market makers on the exchanges, because they actually have, as you know, a fiduciary kind of obligation to catch the falling knife, that when no one else wants to be buying, they have to be that counterpart at the exchanges. And so they have like a very unique and important, role to play when there's a huge, surge in volatility, because you're right. Not everyone can stomach certain levels of risk.
So we're entering the second half of the year. What is it that you'll be focused on? And what is it that all of our listeners, all of our traders out there should be following you for? And just what should we be aware of going into the second half of this year?
Well, I would be delighted if people, followed me on Twitter at Modern Markets. We're really focusing on a couple key things. We're continuing to focus on this question of market volatility and, the role of automation of the markets and kind of stabilizing the markets and creating more resiliency. And that's obviously just important from the standpoint of looking at the role of automated traders as a net positive, which our organization is very focused on. Number two, we're looking at, the political landscape leading up to the elections. And we are definitely, continuing to educate the public on why the financial transaction tax is actually a savings and retirement tax, how this is not like a wealth tax. This is a tax on the middle class. So we're going to be conducting outreach to 529 plan holders, which is about half of America, to 401k holders. And we're shooting a series of MMI brown bag lunches where people can learn more about some of these issues. And we'll be very much conducting outreach to Democrats and Republicans on the Hill, all from this unique kind of remote standpoint. Washington, D.C. at least is still, operating largely on a remote basis. So we've kind of, MMI, like many people have, we've reinvented themselves as a kind of, more digital platform at this point. So it means a little bit more of this kind of activity with you, Anthony. Like, it's great to go on Futures Radio just to have this chance to educate people digitally right now. You're playing a very important role, I think.
Well, I appreciate that. And I appreciate everything that you do, because really I've learned a lot about things in our industry that I didn't follow really in the past. And when you go back to a lot of the policies that have come into play that eventually did impact our industry. And I said, you know what? I'm in this business. I'm in this industry. And I was always just focused on the charts and what it is that I have to do. And that's still my primary focus. But I'm also going to be aware of some other changes that could happen, that could impact us. And that's why you're such a great resource, Kirsten. And I really appreciate you educating us on those things and taking the time to speak with me today on Futures Radio Show.
Well, I'm delighted to be on. Thank you so much for having me.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.